How's it going, everyone? Hunter Thompson, the founder of raisingcapital.com. In this video, I'm going to break down the big problem with focusing on trying to find a deal, and then once you find a deal, starting to raise the capital. And I just got off a call with someone that was struggling with this, and from the conversation, it was so clear that they weren't really thinking about the game of capital the way that people think about it at the elite level. Now, to be fully transparent, some people make this mistake even when they're very experienced, but it's like this video should be the last time you need to hear this wake-up call. If you are waiting until you need the capital to start raising the capital, you are putting yourself in a really bad position. Now, the good news is we got some solutions even if you are in that situation, but I don't want you to go into your business doing this over and over again. So the call I had with the person was basically like this. They had starting looking at deals. They were in a mastermind or a coaching program that helped them look at deals. And they found a couple deals. They started submitting LOIs, and they were thinking that they were probably a couple days away from getting one accepted. And I was like, holy cow, like, what's the plan to raise the money? And they were basically saying, well, that's why we're on this call right now. And I was like, whoa. So you are submitting LOIs. I'm sure in those LOIs, you're saying things about earnest money and what time that earnest money becomes non-refundable and things like that. And then you end up focusing on the capital side while you're in the middle of trying to buy this deal. That's going to be pretty scary. And it's nothing against them. I actually have been through this a bunch, and I just don't want you to go back to doing that again. I don't want to go back to that as well. So here's what this typically sounds like, right? You go out, you start doing due diligence, you find a property, maybe even a couple of them, you submit an LOI, you realize there's going to be some earnest money involved, and eventually you're realizing that if you wait long enough and can't raise the money, you might lose the earnest money. It becomes non-refundable. It becomes hard, as we say in the industry. And so because of that, kind of as you're submitting an LOI, you start to look for sources of capital. And whether that's hard money lenders or institutional investors or big check writers or even accredited investors investing 50K, 100K, you're starting the process in a really tough situation because you're under a time crunch and you don't really have leverage, especially when you go to those bigger check writers. If they know that you're under contract, if you get an LOI accepted, they're going to have all of the leverage. They're going to hold you over the coals, and it's just not a very good way to start a relationship. And so when you go through this process, sometimes you can really find, and this is exactly what we struggle with, we were submitting offers and we're like, I hope these sellers don't accept these offers, because if they do, I don't know if we're going to be able to execute on this. And so think about this from like a seller's perspective. What they're really focused on is confidence of close. And so, I mean, if you're not confident you're going to be able to raise the money, how confident should they be that they should go with you as the buyer of their property? And when you do it like this, you're basically trying to drink from a well that doesn't yet exist, and you're going to lose all leverage, especially if they know that earnest money is already hard. Now, when you do this, the reality is what you're doing is you're trying to start a relationship with investors or capital sources that might take time. And time is like not on your side if you're putting in 30-day, 45-day escrow periods, right? As you should be probably in today's market. The other thing though is that when you go to start these relationships, if you need the money quickly, they're going to smell that on you. And there's two things that can go wrong there. One, investors are like, yikes, this person needs the money. I shouldn't invest, as opposed to what they should feel, which is like FOMO and urgency on their part. Or if they're a really competent investor, they could be like, oh, I'm interested now, because if they need the money, boy, oh boy, I've got the money. So now I have all the leverage, and we're going to go into a relationship where one person's up here, the other person's down here. It's a very expensive lesson you probably don't want to learn too many times. The other element, though, is that if you're going to buy a deal, if you're going to put earnest money into a deal and you're going to start to go under contract, you want to know with confidence that you can execute. AKA, it takes time to actually build this trust. You have to go through a mutual due diligence process. If you're starting the relationship now, you don't really know if they can fund. Maybe they say they can, but like it's still going to take time to understand if it's actually a good fit. So you really know who you can rely on to actually execute. And you're putting not only your earnest money, but your reputation on the line, your reputation with the seller, your reputation with the broker, etc. Now, the good news is There's a better way. There is a better way. If you're watching this right now, it's not too late to get out of this before things get worse. What you got to do is start raising capital before you need the capital. And even if you're watching this and you're like really under the gun, now is the time to start building out something that can attract people to you and convert them to investors. You want to build up a pipeline of your investors, not other people that they have the money, not other sources of capital where they're the ones that would be in full control, but building up a pipeline so that you can see in a dashboard people that have already expressed interest, people that have already even committed before you have a deal, so that you have full confidence in your ability to go under contract. That is how people are able to buy bigger and better deals or more deals without slowly stutter stepping their way in between each deal or burning relationships, losing earnest money, and these kinds of things. By the way, this is particularly important in development because you have multiple stages of your capital raise, or especially important in multifamily because it is so competitive. Everyone wants to be in multifamily, and so who gets the deals? The people that the sellers know can close. Why? Because who are they working with to make that decision? It's not just about price, right? It's about confidence of execution. So who's in their ear telling them who they should go with? Who do you think? The brokers, the seller's broker. That's a person that can put their hand on the scale and say, listen, this person might have offered less, but I know they can close because their confidence of what matters in terms of closing. Is it really due diligence? Is it really underwriting? No, the brokers only care about one thing. Can they actually raise the money? Because that decides whether or not you can close. And if you can raise the money, we can figure out a path to getting through the due diligence matters that may come up. And you also want to convey this to sellers. That is how you are able to submit offers and actually hope that they actually do it. Now, on the other side of this, listen, are quick wins possible? Like, do we help people raise money quickly? We 100% do, and there's strategies for that. I mean, just got a couple examples here. Here's Thomas. He said a couple of months ago, he was devouring all the information that we've kind of taught him. He had a 12-unit building, so this is like his only property after 20 years in the industry. And he went through like our trainings, worked with our coach, and after learning how to truly scale, 1 week later got a 72-unit property under contract with confidence of execution, and he raised $1 million in 10 days. Okay, now this is a couple of months. How long have you been looking at this industry? How long have you been working on this process? How long have you been wondering, how can you raise $1 million in 10 days? Like, I know it's not the most amount of money, but it's probably 7 figures more than a lot of people can raise in 10 days, right? What other examples? Well, here's Brooke here. My business partner Ron and I joined a few months ago. We've been late to posting, but we've got commitments of over $5 million of our $10 million raise after just a couple of months. Now, you could be watching this and be like, oh, a couple months. I don't have a couple months. Okay, cool. Well, what about this? Just went directly into low-hanging fruit from existing contacts, pulled their phone, executed the exact templates and strategies and script that we help people do with no deck, no webinar, no ads, just conversations, $1.3 million across the finish line very, very quickly, like in a matter of days. Now, on the other side of this, like what happens if you actually execute what I'm really talking about, which is really building a well, digging a well that you can really drink from? The possibilities are endless. It will change your business when you don't have to go looking for investors, but you've built up a pipeline of interested investors that want to invest with you. If you're watching this right now and your goal is to go from single family to multifamily, like you're seeing these eye-watering figures some of these firms put up, it's because they dug a well that's sustainable. And so at the top of the food chain, you're going from buying single-family houses to multifamily houses, 12 units to 72 units. And then the top of the deals in America are usually somewhere between $10 to $50 million. Someone just posted this in our group. They just closed a $44 million deal. Now, fully transparent, they've worked on this for years. But isn't it worth it? Isn't it worth it to totally control your capital so that you don't have to go to some other party when you have no leverage, your timeline is crazy, and you've got earnest money or you're about to put earnest money into a deal that you might lose? That's what I want for you. It doesn't have to be with us. I just want you to think about the fact that you can totally do it. right? If you're watching this right now, you can build a business that attracts investors to you, that gives you confidence to close prior to you submitting offers so that sellers know it, so that brokers know it, so you can pay less than your competitors that aren't as confident that they can close. I'm only saying from experience, it's exactly what I went through. From struggling my first capital raise to being scared as crap every time we submit an offer to being, the last deal we did was a $10 million deal in Phoenix, one of the smallest deals we've done recently. But hey, 10 million, 56 units, right? The path is clear. Hope that helps.